Well, hi everybody, I'm Paul McDonald with Exit Realty First Choice. I'm a realtor here in Palm Coast, Florida. I have a very special guest today, Mr. John Reardon. He's a pro at reverse mortgages, and more specifically using a reverse mortgage to purchase a home. So that's something a lot of people don't know about. I knew very little about. So we're here to kind of educate not only people that could benefit from this, but other realtors too. So it's a tool we can have to share with buyers out there that could possibly qualify for something like this. So
absolutely.
Great. Well, John, if you'll just start, tell us exactly what a reverse mortgage for a home purchase is. How do we refer to it? And we'll kind of get into the basics of it.
Great, absolutely, Paul. And thank you for asking me to talk, interview me for the reverse mortgage for home purchase. Just so people know, I'm a reverse mortgage specialist. I have my national mortgage license and my state mortgage license. I work for a company, Open Mortgage, but I focus on reverse mortgages. And a lot of people don't realize that realtors can help buyers age 62 and older purchase a reverse mortgage for a home that they're buying. Typically, people think that people can get a reverse mortgage in the home that they're living in to use to live longer in their home. I could also do that, but today we're talking about the reverse mortgage for home purchase, which realtors can do.
That's interesting.
Absolutely. It's an FHA assured loan. It's typically called a HECM loan. HECM, reverse for purchase. HECM stands for Home Equity Conversion Mortgage.
Okay.
And the basis of doing this is helping buyers downsize or right-size from their home or relocate here.
Sure.
Paul,
and
as a realtor.
In Florida, that's pretty common. You know, a lot of people like to retire to Florida, so this could be something that could benefit them and help them find the right place down here.
Absolutely. It can help you as a realtor even leverage them into a nicer home.
Great.
If they have limited funds from the sale of their last home. So the whole premise of it is you're going to help buyers with the purchase. They're going to have proceeds coming from the sale of their last home. Okay.
So let's say New York is a big state people come here from. So let's just say they sold like made $300,000 on a house they sold there, and they brought that money down here, and well, the house they fell in love with might be $400,000 or $500,000, so it might be more than the money that they brought with them.
Right.
Can that still work for them?
Absolutely.
Okay.
So if you were helping a couple coming down here, and they just sold their home from New York and New Jersey, and they're walking away with $300,000. Well, if they come here to Palm Coast or to Florida, finding a home now in Palm Coast for $300,000 that's livable and very nice is tricky in this day and age. So the premise of the reverse mortgage for purchase is you can consult with them, show them listings, but you turn to me. And then I talk with you all, and then say if you're helping a couple age 68 and 65 years old. Okay. Okay? And they have $300,000 cash from the sale of their last home. Okay. I would tell you, based on their age, how much money they would receive in the reverse mortgage for purchase, based on their age, the value of the home, and of course I know the interest rates. I have a reverse mortgage program. Okay. So you could actually help get that couple into a $500,000 home, where they would be speaking of, right now with the current rates, about $259,000 of that $300,000. Okay. The rest is like a silent mortgage in the reverse mortgage that they get during the transaction. It's a 45-day transaction. Okay. And then it's an FHA insured loan, so I have to qualify them. I have to look at their credit. It's not based on their credit score, but it is based on their credit history. If I have to review their credit. Okay. Because if they have bad credit, then they would be subject to an escrow account for so many years of property taxes and homeowners insurance. But if they have good credit, you can help them get into up to a $500,000 home. Okay. With $300,000. That's great. With the youngest borrower being 65 years old. Okay. Very interesting. And then they have no mortgage payment for as long as they live there. That's great. And then what happens is, the premise of the reverse mortgage is that loan goes up each month and each year by an interest rate. This is how the bank is paid. Okay. And then they get monthly statements, how much the loan amount is with the reverse mortgage.
Okay.
They'll get monthly statements, just like a regular mortgage, but they're not making payments on it. But, and then when they pass away, if one person passes away, they don't make payments on it, as long as, this is the rules, as long as they're living in the home, it's their primary residence,
Okay.
and they're paying their homeowner's insurance and their property taxes every year, and they keep the home in good condition.
Okay.
Like a regular
Like
mortgage.
regular. Okay.
Absolutely. And then the rule is the loan is accumulating, and I show an amortization schedule where the loan is accumulating to upon the beginning talks.
Sure.
And then when one person passes away, the other one can continue to live there forever if they want. Or they could sell it at that time and maybe downsize and move in with their kids. They don't want to stay in the home by themselves.
Okay.
By themselves. Or they can just live there still, not having a mortgage payment, just always paying their homeowner's insurance, property taxes, living. And then when that person passes away, the last borrower, the children or the heirs get the house. There'll be a loan balance due, just like a regular mortgage.
Sure.
And then they can choose to either list it with a realtor at that time, sell it at market value,
Okay.
pay back what's owed on the mortgage, and then how any other mortgage is cleared like that. Or they can pay it off, the outstanding mortgage balance, and own the home themselves.
Okay.
So that's kind of
Right,
how it's
so-
wrapped up at the end.
So the options are there for the family or whatever beneficiaries. They can keep it by paying off the reverse mortgage.
Yes,
or
sir.
sell it.
Yes,
Pay off
sir.
the reverse mortgage and keep whatever's left.
Absolutely.
So that's pretty simple.
Absolutely. And a lot of times, you know, there's niche loans out there, like VA loans are for veterans. FHA loans are for people who want to put down 3.5% or whatever FHA loans are. So this is a loan created for home buyers age 62 and older.
Okay.
And the majority of people use it to stay in their home to get the money to live on in a reverse mortgage. But the HECM for purchase, the reverse for purchase, is a niche loan that can help buyers purchase the home.
That's great. What a great tool to know about. And for most people out there that just get kind of confused by a reverse mortgage, it's pretty simple. Just,
Correct. Yeah.
Right.
So it's a pleasure talking with you, Paul.
You as well. Thank you so much.
Thank you for being an outstanding realtor and wanting to learn more about products, loan products. I serve all of Florida, and I would be happy to help anytime.
Perfect. Well, I appreciate that, John, and I will put all of his information in the description of this video at the bottom. But thank you, John. I appreciate your time, sir. We all learned a lot today. Thank you very much.
Thank you. A pleasure.
Have a good day.
You too.